All right, let's continue our conversation about jobs. Alan Sinai is President, CEO, and Chief Global Economist over at Decision Economics. He comes to us from Boston. Good afternoon, Alan. So we've had a lot of hours to digest this report. So what is kind of your final takeaway from the release this morning?
Well, we've got some positive momentum in the labor market. Look, it's a tough labor market. It's going to stay tough. It's a jobless recovery. But in that context, it is getting better. We've had now 2 months, 850,000 people in the last 2 months have found work that didn't have work before. That's in the household survey, the one that gives you the unemployment rate. And that's good because they'll have some money to spend. I think I was liked the result. I think it was constructive. It supports an economy that will keep on going. We have a sustained recovery. It's going to be a tough jobs market. The president is right. It's hard. They can't rest. It's a big public policy issue, but we're moving forward.
Hey, you know what? Joe Saluzzi, noted street smart bear, writes in and says he can't believe that everybody is so giddy by the loss of 36,000 jobs, and you got to give it to him. It isn't good. He says we're still climbing. We still need to climb out of the basement. We're going down the stairs here. Do you disagree?
In the next 3, 4, 5 months, we're going to see some positive jobs creation on the non-farm payroll basis. Even when you subtract out the census workers, we'll move from negative to positive. That's progress. In a flow sense, it's progress. So, no, I don't think we're moving down the stairs. I take encouragement in that kind of movement, any kind of positive jobs creation. Is it anything like history? Is it anything we can cheer about? Do we relax and think we're going to grow 200,000 jobs a month and take the unemployment rate down sharply? The answer is no. The economy is not going to grow fast enough to do that. But we're making progress. That's a plus. And it is supportive of the cheering of the stock market that consumers, even though they're still beleaguered and in a tough situation, can spend enough to keep the economy going.
But it's still kind of a less bad kind of progress and not yet really getting better, isn't it?
That's semantic. Less bad is getting better. Today, to me, I'm talking about positive momentum. In other months, 3, 4, 5 months ago, I talked about less bad. It's different. The fundamentals around the consumer are slowly improving from what was an awful situation. We will see that next year in better consumer spending and in an economy that will keep on growing. And if we're in a cyclical recovery and then expansion, it's supported by minimal job growth, nothing like we would want.
Right.
That's positive.
Alan, you know what's interesting? I think a lot of folks come on and they say, yeah, I think this year is going to be okay. I'm not too worried. But I keep hearing people say, but let's see what happens in 2011. Are you in that group? I mean, are there potential problems, another slip back in the economy potentially, more problems for the labor market next year?
No, we're actually not. We really disagree with, I think, what may be a consensus, which is that the economy could kind of fade out, die out late this year and next year. The main reason is the fiscal stimulus will fade. What happens is this long period of really easy monetary policy, quantitative easing, and the lagged effects of the fiscal stimulus takes time to get going. And even the consumer, where the wealth position, where the financial position of the consumer is still bad, but getting better. Consumer spending will respond to that, not this year, but next year. So we think the economy will do okay in 2011.
Right.
And will support earnings, and we'll be fine. We've got a 3 to 5 year expansion going. We do not think we're going to slip back late this year or next year.
I mean, a good sign to see those retail sales numbers that we got. They were stronger than expected. Everybody worried that weather was going to kind of wreak havoc on those February retail, but they came in better than expected.
Yeah, particularly on a year-over-year basis. But do remember that last year, the consumer was collapsing. So this is a year-over-year comparison, and it's a little bit of false hope in that. The world is still tough for consumers. Consumer spending will grow, but nowhere near what it does historically. We'll take it. 3% growth in the U.S. economy, half the rate we normally have in most of our recoveries, is good enough. It's not good enough to get the jobs rate way down. That's a big problem for public policy.
Where do you think we end the jobs rate at the end of the year, Alan?
I think we've peaked, and we'll probably end up somewhere in the low 9s. The problem is we can't see, given what we see for growth in the economy, getting below 8% even by 2012. That's the
rough.
problem. That's an awfully high unemployment rate.
It is.
It is. All right, Alan, thanks for joining us. Alan Sinai there from Decision Economics. We're going to take